Markets end with sharp cuts but off intraday lows. Nifty closes below 25,600, dragged down by heavyweights. Over 30 Nifty stocks close in the red, with most sectors ending lower, while FMCG manages to buck the trend.
Sun Pharma is eyeing US-based Organon in a potential $10 billion deal, sources tell CNBC Awaaz. The drug maker is looking to acquire majority stake in Organon Pharma or purchase select assets.
Tech Mahindra gains after beating estimates on most parameters, while Wipro takes a drubbing as it falls short on growth expectations. Tech Mahindra management tells CNBC-TV18 while the third quarter was strong, it is currently hard to forecast the future. However, maintains 15% margin target for the year.
Bharat Coking Coal makes a stellar debut on the bourses, with the stock listing at over 95% premium to its offer price of 23 rupees. The country's largest coking coal player has given a strong guidance for FY27.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all of the key data points to gear up for the next trading day. I'm Ritu Singh. With me is my colleague Vivek Iyer, and what a volatile day we've had. The markets under pressure, recovering from some of those lows, Vivek, but still ending with cuts of about 108 points on the Nifty and 324 points on the Sensex. The pain in the mid-cap and small-cap especially stands out, Vivek.
Absolutely. Good afternoon, Ritu. And, like you mentioned, a very volatile trading session. Remember, we had a lot of cues coming into trade today morning, especially given the fact that it was an earnings-heavy weekend. All of the banks, majority of the banks that were heavyweights as far as the Nifty Bank were concerned, came out with their results. So we expected them to react. And as expected, ICICI Bank, HDFC Bank were sharp movers today. Even Reliance Industries and some names from the IT pack, names like Wipro as well as Tech Mahindra, actually saw sharp moves. On the back of that, like you mentioned, a very volatile trading session is what we witnessed.
Yes, banks, IT pack, all of those names were in focus today. But here's a lineup of what we have in store for you today. We start with the top movers and shakers of the day with Hormaz. Tech Mahindra surged after beating estimates in most parameters. Wipro, however, slipped on the back of weak fourth quarter guidance, while CG Power edged higher after securing an order that was worth nearly 900 crore rupees. Last but not the least, we will delve into the key market events to watch out for tomorrow's trading session.
Well, thanks so much for taking us through our viewers of what exactly we have lined up on the show. But we can now kick off the action on Markets Forward with the wrap of today's market action. Over to Hormaz, who's standing by the wall.
Well, it was an impressive recovery, if you could call it that, from the lows of the day. But the day was dominated by earnings reactions, and earnings reactions both on the banking side and on the non-banking side. One of the major reasons for the Nifty fall is on this list. That is Reliance Industries, ending 3% lower today. But take a look at Hindustan Zinc. Numbers were out just before market close. The stock ended 3.5% higher. The accident of the day was Wipro, and 8% lower on the stock. Multiple downgrades coming in. Price target cuts coming in. JSW Infra as well had an impressive session, almost 5.5% higher, and Jindal saw the top gainer on the Nifty 500 today, almost 16% higher in an otherwise volatile and wobbly market. These were the non-banking earnings. You take a look at the banking earnings and you will understand the second major reason for the Nifty fall. That's ICICI Bank. Still ending 2% lower as a recovery from the lows of the day as well. But Reliance and ICICI Bank both played their part in dragging the Nifty lower today. RBL Bank was 7% lower. PNB at one point was down almost 5%, still ended 3.5% lower. And IDBI Bank too, ending almost 6% lower in today's trading session. Beyond earnings, there were a lot of other newsmakers as well. Interglobe Aviation, of course, after the DGCA action, 4% higher on the stock. Polycab, after brokerages raised their targets to as high as 9,500, ending 4% higher after its results. CG Power, after that big order win, ending with gains of around 5%. And Bazaar Style Retail, that fundraising plans in the works, ending almost 14% higher in today's session. A sector that has been sulking all through the last few weeks has been real estate, and today was no different. Godrej Properties is now at multi-year lows. Brigade is at 52-week lows. Signature Global is at 52-week lows. All of them ending with losses anywhere between 3 to 5%. And Aditya Birla Real Estate too, not having a very good day at the office either. And some of the other names that ended at a 52-week low in today's session, Tejas Networks continues to underperform. 4.5% higher in today's session as well, in lower actually. Sapphire Foods and EMS also ending at 52-week lows, as did Indegene, losses of around 4%, so more than green, but the index managing to hold on to some key levels in today's session.
All right, Harmas, thanks very much for taking us to zoom in on the IT pack. There, you had Tech Mahindra, which served after beating estimate more parameters. But on the flip side, you had Wipro, one of the top losers today, slipping on the back of weak to wrap up the action from the IT space. Keep earning. Rima.
So much for that. Let me start with Wall Street is disappointed with Q figure. For Q4, that's the Jan-March quarter, the company is guiding for 0 to 2% growth. The analysts say this is 2 months from acquisition that they did, the DTS acquisition, which according to some estimates could contribute 50%, which means if you strip out the benefit of the acquisition and look at the organic view, it's at -0.5 to +0.5%, which is lower than what we had in Q3, which is why the street is so disappointed with the guidance. The management attributed the guidance to fewer working days and delayed ramp-ups in certain deals that they won earlier in the earlier quarters of FY26. Also, FY26 would mark perhaps the third consecutive quarter of a decline. Morgan Stanley today downgraded the stock to an underweight. In fact, 47 analysts track Wipro, and out of them, 36 of them either have a hold or a sell rating, according to Bloomberg. Tech Mahindra, on the other hand, is having a good session, led by a beat on revenues and on margins. Margins for the company have been a very solid story. From a low, a trough of 4.7%, they now stand at 13.1%. This is the 9th consecutive quarter of a margin expansion, and the company remains on track to achieve its guidance of 15% margins by the end of FY27. And the company's aspiration is also to achieve industry-leading revenue growth. JP Morgan has upgraded Tech Mahindra to an overweight. Back to you.
Well, thank you so much, Rima, for taking us through two of the top moves in the session today. Wipro seeing a sharp fall, while Tech Mahindra doing quite well despite the market volatility. But it's a good time to go across to our guest, Amrish Valika, independent market expert, and Jay Thakur of ICICI Securities. Good afternoon, gentlemen, and thank you so much. Well, Amrish, let me come across to you first. You just heard Rima talk about both Wipro as well as Tech Mahindra. Divergent trends across both of these names, divergent results as well. Within the IT space, where does your top pick lie? And do you believe that the worst is over for the IT pack?
See, the worst may not be over for the IT pack. Although the commentary which is coming is slightly on the positive side, but I would still wait for a quarter or two more to see the consistency before really jumping in. But in the pecking order, clearly among the larger ones, it will be TCS, then possibly HCL Tech. And among the ones which we spoke, Tech Mahindra surely would be there because of the sort of earnings they are showing. So I think the upside for Tech Mahindra could be about 1900, 1925 possibly. But something like a Wipro, I think should be ignored because, if you look at the last 8-12 quarters, I think most of the quarters they have disappointed than surprised. So I think Wipro clearly is, off the table.
Jay, is it the same for you? Is Wipro completely off the table? I mean, it's been underperforming and, the guidance has been lowered quarter after quarter. That performance is really not coming back on track. So on Wipro, what are you going to do? And on Tech Mahindra and some of the other IT pack as well, very bullish and very bearish.
Hi, good afternoon to you, Ritu and Vivek. Absolutely. I mean, IT pack is quite mixed, I would say. A couple of months ahead, when overall IT pack was correcting, Ritu, the mid-cap IT names were relatively outperforming the large-cap IT names. And there came November, December short covering in the overall IT pack, mainly the large-cap stocks, wherein even the stocks like Wipro, in fact, had seen a good short covering, and we saw index bouncing back from 34,000 to 40,000. Now, after 40,000, after index hit those levels, where it previously had reversed from, I think now it has become very selective, very stock specific, and post results that's coming out very clearly. So if you see then Infosys, HCL Tech among the large cap stocks are clearly the outperformers, not only from the result point of view, from the price action as well. So I think there has been a good amount of shorts out there in Infosys, and post results we have seen some short covering happening. So my preference would be HCL Tech, Infosys, and thereafter TCS. As a disclaimer, I would say that TCS we have recommended to our clients as well from the medium to long term perspective. After 4 quarters, there has been a positive close. So TCS has a good room to see some short covering going forward, at least until the levels of 3,500. So these are the 3 stocks which we like. Absolutely not Wipro, because we have seen the results as well as the price action and the derivative data is not at all supportive. However, from the mid-cap stocks, Tech Mahindra has provided a fantastic breakout today with a long build-up clearly. So that is one stock which can be looked in, along with LTI Mindtree. I think these are the two names which I like, and are likely to outperform the other IT names. Stocks like Tata Tech, Tata LXI are still not showing that kind of a momentum or a price action. But LTI Mindtree and Tech Mahindra, these should be the good bets within the mid-cap IT names.
Right. Well, thank you so much for that, Jay. One pocket of the market that was in focus on the back of earnings was IT, but the Nifty bank too was in focus. Remember, over the weekend, especially on Saturday, you had a whole slew of large private banks declaring the results. Gaurav joins in with more details on how exactly banks fared as far as Q3 is concerned.
Let's begin with Punjab National Bank, the latest one. We saw a fall after their Q3 results, and the reason being that if you look at net interest margins, they declined by 8 basis points. And not only this, if you look at net interest margins, they are still lower than their own guidance. Other than that, let's also talk about big names like HDFC Bank. We saw net interest margins actually improved here. Second is that credit cost, that also improved, and at the same time, LDR ratio, now management said that it will be brought down to 95% in the next quarter itself. But apart from that, there were two negative news and which came in as a surprise. First is that Mr. Bhavesh Zaveri, who is executive director, said that he will not be seeking for reappointment. And second is that bank reported 500 crores worth of additional provision because of the regulatory inspection. As a result, we saw some pressure in this counter. When it comes to ICICI Bank, the same set of number is what we saw in terms of provision, because they reported 1,283 crore rupees as an extra provision because RBI asked them to do so as their agri PSL portfolio was not in compliance. As a result, their credit cost increased, profit declined almost by 4%, and this was not taken in a negative positive way by the market. The stock was down more than 2%. Other than that, let's talk about RBL Bank. This saw one of the biggest falls in this year so far, and the reason being that although net interest margins they improved by 12 basis points, on the flip side, credit cost increased almost by 40 basis points, and the key reason was credit card segment. Now, management also said that in the next 2 to 3 quarters, the stress in credit card segment will remain, and as a result, we saw market did not take it in a positive way. When it comes to Yes Bank, we saw asset quality improved, and at the same time, net interest margins also improved. But on the other hand, ROAs, although they reached 0.9%, but this was because of the 555 crores worth of the gains that they reported because of the security receipt sell. And if we exclude that, the ROAs still remain flattish on a sequential basis. Apart from that, management also indicated 8% growth for FY26, which they were earlier indicating to be in double digits. So that was something which was not taken in a positive way. And lastly, let's also focus on IDBI Bank. Now, this bank was in focus because of the stake sale from the government. But in this quarter, if you look at net interest margins, they declined almost by 19 basis points. And after that, we also saw some pressure in this counter. So all in all, throughout the weekend, except for UCO banks, the banks which reported numbers, we saw some pressure in that. And even for Punjab National Bank, because of the net interest margins that declined, we saw some bit of a pressure after its results in a day-to-day.
Wow, Gaurav, that was exhaustive and comprehensive. Thanks very much for taking us through all of those numbers. Ambrish, your view on the banking pack, specifically ICICI Bank now, typically it's been an outperformer in the private space, but, this additional provision that RBI seems to have asked the bank to make has dampened spirits, despite the fact that, Sandeep Bakshi is getting this 2-year extension, which the street was looking forward to. Your view on stocks like that, as well as HDFC Bank with the lingering high LDR concerns?
Both these stocks have fallen more due to their provision than anything else. And the way I see it is possibly it's a one-time sort of a provision, may not get repeated. So ICICI Bank, I really don't see it going below that 1275, 1300 levels. So because of this weakness, it comes to those levels, could be a good time to buy. At the same time, I would be more bullish on the PSU banking space. May not be PNB after the sort of earnings they have announced, but something like a SBI or Bank of Baroda, surely I'll be more bullish than the private sector space.
So more bullish on the PSU banking pack, especially some of the larger PSUs versus the private banking space is what you mentioned. But moving on, the shares of CG Power rallied after the company bagged a large order worth nearly 900 crore rupees from Tallgrass Integrated Logistics Solutions for a large-scale data center project in the US. Winnie joins in with more details on this large order win.
Well, thanks for that. Yes, CG Power was a stock that was in focus today. The company has won a 900 crore order. This is for US data centers. They won these power transformer orders, which they'll make for tall grass. Now, the execution period for this is 12 to 20 months. The transformers will be designed, manufactured, and tested in the manufacturing facility in India. The order backlog, when you look at it for the company, is at around 13,500 crores. This was as on 30th of September. Power segment accounts to around 40% of their total revenue. Now, why is this important? Because it's an important big data center order. That's an export order that they have, and a big one that's coming for the company. This aligns with CG Power's strategy that they've been talking about, opens long-term opportunities for the company in the international market as well, in the data center projects segment, especially US as well as worldwide. Now, analysts expect power as well as OSAT to be a high growth segment for the company, margin accretive business as well. And this is something that they expect will outpace industrials in terms of overall growth for the next 2 to 5 years. And that is why CG Power was buzzing in trade.
You're absolutely right, Vinny. CG Power, one of the sharp movers in an otherwise lackluster market, you could say. Well, Amrish, if I could come across to you, shares of CG Power, shares of other capital goods stocks, especially a name like BHEL, saw significant selling pressure, multiple worries. They spoke about possible Chinese competition as far as domestic tendering is concerned. Do you feel some of the concerns are overdone, or do you feel these stocks could still correct further, especially as far as valuation multiples are concerned?
No, valuation multiples I'm not really too bothered about, but then I think these stocks are correcting because of the Chinese competition which is being talked about. But even that, I think, is being overdone. It could be basically, you could have the Chinese companies coming in basically for the goods and items which are not being manufactured in India. But then as far as the Indian companies are concerned, I don't think one should be too worried. So, I would surely utilize this correction to buy into the capital goods space because clearly, if we're talking about the next 3-4 years, the spends are going to increase, no doubt.
Any view on CG Power from you? And also this new listing we had today, Bharat Coking Coal. Strong listing for the company. Is that something you're looking at as well? Jay, if you can hear me.
Yeah, sure. Ritu, well, see, CG Power, as that is concerned, I would say that recently the kind of fall which we have seen since past 3 months, almost we have seen this stock falling, and it had provided a monthly negative close. In fact, the month prior to that, the fourth month was almost flat. So since past 4 months, we haven't seen this stock performing, and whatever fall we have seen coming in this stock was mainly on account of long unwinding. We did not see any short build-up here. However, since past 1 week, what we have been seeing is that at the lower levels, there has been a good volume activity. There has been a good increase in the volumes, better than this past 1 or 3 months average. And with today's up move, there has been some long build-up as well in the F&O data. So for the short term, I think that there could be a good bounce till 640, 650 levels, which could be another 10 odd % until 570 levels are held. So in the short term, it could be a buy on dips. It could be a good long trade. But from the medium term perspective, Ritu, I believe that the stock may continue to trade within this range of 650, 700 on the upside to 550, 500 on the lower side. So short term, it's a good buy. But from a medium term, I think it could see some consolidation as the momentum is not that supportive from a medium term point of view. As far as the new listing is concerned, it is not in the F&O, it's in the equity cash segment, so I would not be able to comment on it.
All right. Ambrish, do you have any view on the new listing we had today, BCCL?
The Bharat Coking, I think your listing was much better than what was expected. We were expecting a listing at about 35, 36 levels. But then the sort of a listing was really huge gains. So I think because of that, we saw some correction post-listing. I would suggest that one should look at buying this maybe only at levels of about 35, 36. At the current levels, I'm finding it a bit expensive.
Well, thank you so much, Ambrish, as well as Jay, for joining us on the show today, giving us a view on the markets, individual stocks, as well as technical levels. Well, with that, it's time for a quick break on the show. On the other side, we get your key market events to watch out for tomorrow's trading session.
Welcome back. You're watching Markets Forward. Now, third quarter FY26 is expected to be a better quarter compared to the second one for India's capital goods players. Now, this is led by post-monsoon recovery, strong order inflows and execution by high voltage power OEMs. The rest of the industrial plays is to be a mixed bag. The important drivers for capital goods companies in the third quarter was healthy execution momentum across T&D-led projects and product companies. Second, execution of robust outstanding order books, on the third quarter estimates. That's as far as your capital goods space is concerned. But Vivek?
Well, no, we had CLSA's Lawrence Bellangco today, and he believes that the dollar weakness could continue in 2026. He adds that a weaker dollar setup is constructive for broader emerging markets. Further, he's quite cautious on silver at the current levels and says aluminium has seen breakouts from a key level. He also anticipates a breakout in Indian mid-caps after a 24-month consolidation period. Let's listen in.
If you look at the mid-cap sector, that's probably the one that we're most constructive about for 2026. We've been consolidating there for nearly 24 months. And I think a meaningful break through the 62,000 area for the mid-cap space, gives us upside of over 30%.
All right. And before we wrap, we'll bring you some of the key market events to watch out for. As always, Gaurav Javalkar is standing by with the key events for tomorrow's trading day. Gaurav?
Yes. If you look at the Indian market result, third quarter's result is something that we will be closely tracking, and we have got a couple of companies which will be in focus. First is Persistent System, Gujarat Gas, EU Small Finance Bank, Cyan DLM. All of these will actually come up with the results. Apart from that, ITC Hotels, Jammu and Kashmir Bank, Mastec and Supreme Petrochem. Now, if you look at these companies, some of them, they have already reported good set of numbers in pre-quarterly updates like EU Small Finance Bank and the J&K Bank. So let's watch out for these. Apart from that, World Economic Forum's annual meeting is happening in Davos, and we at CNBC will be bringing you exclusive interviews from some of the top managements. Apart from that, core data, that is something that we will be tracking because the index of 8 core industries, they will release their data for the month of December. Remember, this is actually important to see how the trends are happening at an industrial level. Restaurant Brands of India. Now, this company is going to be in focus because tomorrow is a day when they will be having shareholders meeting and they will be discussing, actually board meeting, where they will be discussing the fundraising issue. Apart from that, from the global fronts, first is that the US market will be in focus because US Supreme Court is expected to issue the next ruling for several major cases, which can also include the legality of Mr. Trump's global tariffs that he has put on all the other countries. Other than that, the ADP employment change weekly data, that is something that we will be closely tracking from the US market, and from the Chinese market, we will be tracking the loan prime rate for 1 year and 5 year mortgage. So let's watch out for all these events and see if they have any grip on the Indian market tomorrow.
Well, thank you so much, Gaurav, for joining in and giving us all the key and important events to watch out for in tomorrow's trading session. Earnings killer, it looks like. But with that, it's all the time we have on this edition of Markets Forward. From Ritu and myself, we will be back with more news and updates on the other side.